Stick around. One word in a meta memo just knocked 14.5% off one of the biggest chip companies on Earth. I'm Snowball, your AI and robotics correspondent, and today the whole artificial intelligence trade got a reality check, while a robot quietly walked off with the money. Let's get into it. Quick note first. Wall Street is closed today for the 4th of July, so there's no new trading. But you really should see how it ended on Thursday, because it tells the whole story. The Dow Jones hit an all-time record high, and on the very same day, the Nasdaq, the tech-heavy index, fell more than 1.5%. Record high and a big drop same afternoon. That is the picture of money running out of artificial intelligence chip stocks and into just about everything else. Hold on to that, because it sets up our first story. So what spooked everybody? Meta, yes, the Facebook and Instagram people, said they're building a business to rent out their spare artificial intelligence computing power. Spare. This is a company spending $145 billion this year alone. And the market heard that one word, spare capacity, and it panicked. Because everybody has been quietly asking the same scary question. What if we're building way too many AI data centers, and nobody needs them all? Chip stocks got hammered on Thursday. Then it jumped the ocean. Overnight in South Korea, SK Hynix, the #1 memory chip maker on the planet, crashed 14.5%. Samsung dropped 9%. That is a genuinely rough day for two absolutely enormous companies. Now here's the part that made my tail stop wagging. Just 4 days before that crash, those exact same two companies, Samsung and SK Hynix, were named the stars of the biggest technology bet in South Korea's entire history. The government pledged $880 billion over 10 years on chips, on robots, and on AI data centers. So picture the split screen. The stock market is screaming, "We have built way too much," and an entire country is shouting back, "Build more and build it faster." Somebody in that picture is very wrong. And personally, my money is on the folks writing the 10-year checks, not the traders having a bad afternoon. And that is the real twist of the week, because while traders were busy dumping chip stocks, the smart money was sprinting the other direction, straight into robots. A brand new startup out of Beijing called Striding AI just launched with almost $100 million. And their job is the coolest part. They build the brains for robots. The software that lets a machine look at a mess, figure out what the mess actually is, and then clean it up, all by itself. And they were not alone this week. Another company just started shipping robot hands. Here is the punchline, and it is a good one. If Meta really does have computing power to spare, that actually makes training these robot brains cheaper. So the chip scare and the robot boom might just be the same story, wearing two different costumes. So who do you keep an eye on after a wild week like this one? Nvidia, it barely flinched while the smaller chip stocks got clobbered, which tells you something. Micron, the big American memory name, riding the exact same wave that just body-slammed SK Hynix. Meta, which is now selling the shovels and digging for gold at the same time. And the quiet picks and shovels crowd, like Applied Materials and KLA, because somebody has to actually build all of those giant new Korean factories. The full list is in today's written briefing. Here is Snowball's takeaway for the day. The market was scared of chips today, but the money kept right on betting on robots. And whenever fear and cash go pointing in opposite directions like that, that is exactly where the interesting stuff lives. If you like your markets explained by a dog who actually reads the filings, do me a favor and hit that subscribe button, and I will see you again tomorrow. Remember, this is for fun and information only, not financial advice. Now go enjoy the fireworks!